read, for lack of a better word, is good. Read is right. Read works.
Hello everyone and welcome to episode 19 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we had a downswing. We're all the way down to $80 trillion. Our stock price on our insurance company has dropped all the way from 309 down to 151. We made a little bit of money on the commodities, but they are really not moving as much as we would like right now, and with the interest rate high, they just are kind of stagnant, with the exception of the stock index, which is kind of in free fall. Started off on a slow deal, and that's kind of what I expected it to continue to do. And at the beginning of last episode, I figured that this trend was going to continue and that I would have to think about maybe selling a portion of the insurance company's stock before it really dropped. But then it dropped all at once and I missed the opportunity. It's showing that it's on the way back up right now, but I wouldn't believe that. I wouldn't put too much stock into that. I think it's going to probably fall again back down to the 11 to 12,000 range. And I'm under, if I wasn't recording an episode, I would probably sell it short some more, but we have a lot of things that we want to do and I don't really want to be paying attention to this. So we're pretty much going to be ignoring our net worth for this episode, probably the next one as well. And we're just going to be making some investments that will help this rebound. I don't really care how low it goes. It's probably going to go down to 60 trillion before it goes back up, unless we get an easing policy on the interest rate, which right now is neutral. So unless we get lucky, I think the stock index is going to fall back to the 11 to 12,000 range. But anyway, what we're going to be doing today. Last time we got through all of our stocks and got everything updated and situated and all that. And in updating my spreadsheet, I've identified some maintenance items. I've also added 5 new industries that I want to get into in this episode. I want to buy some companies in these 5 industries. They are pharmaceuticals. Here, let me scoot this over. Wrong button. They're going to be pharmaceuticals, steel, air transportation, chemical commodities, and brewing and distilling. And there's a lot of money in these industries, and I want to get involved with them as soon as possible. So we're going to be doing those today. We also have one stock that we have shorted, Intel Corp, basically. We're making $15 billion on him right now, or $14 billion. And in November, 1 month from now, he declares his earnings again, and he's got a negative cash balance at present. And so I expect it to go down a little bit more. So what we're looking to make is about $20 billion on this one. And so as soon as it gets down to that range, we will look to cover it. But anyway, we are also going to be engaging in our stock options experiment. For those of you who missed the last couple of episodes, I've been talking about this for a while. Basically, the research report has a recommendation. Well, that one's not traded. Let's go to one that's not 100% owned. The research report has this recommendation here. And on pretty much all of the industrial companies, anybody that's not a bank, a holding company, or a insurance company, these recommendations are fairly accurate. And so the experiment's going to be to nest some companies one inside the other, have them buy options on each other and on any companies that are rated strong buy. And normally the way I buy options is I will buy options that are 2 years out. But in this case, I'm going to buy options that are only 2 quarters out. We're looking to make a short-term gain. And so the swings will be a lot more dramatic in the pricing of the option. And hopefully, because I'm not sure actually what this recommendation is based off of. If it's based off of 1 quarter or 2 quarters or a year. I know it's no longer than a year, but I'm just going to take a middle of the road approach and go with 6 months, 2 quarters out. So let's say we start it in November. That would be the 4th quarter, so I'm going to set them for the 2nd quarter of 2021. And hopefully we'll make a profit on that. Basically we're just going to run an experiment and see what happens. So if that's something that can be done over and over and over again, then we'll probably do it once a quarter or something, maybe twice a year. So anyway, that's the plan. So we're going to start to work it. Now I'm going to go ahead and run these maintenance items first. I don't think it's going to take very long, but then we'll go ahead and buy these and then we'll delve into our experiment. We already have all the companies that we need to do that. So hopefully by 30 minutes in we'll be finished with that and we can just kind of react to what's going on, look at the index and figure out what we want to do next. All right, so first of all with Cabot. Cabot is still a subsidiary of RakeM Insurance, and we want to give him to one of our other insurance companies. And Tokyo is the smaller of the two, so I want to give Cabot to Tokyo so that Tokyo can start putting Cabot's income on his books. All right, and as soon as I say stock index is going to fall, here it is rising. So next up, we have GE, and we need to increase his R&D. Increase his R&D. He's currently spending 20%, but he's very incompetent. And basically, I just want to use up all of this profit, so I'm going to increase this to 24. Want to get him to very capable as quickly as possible. All right, Dayton Hudson, we want to increase his growth rate. The industry is growing at 4%, he's growing at a -10. Now he has options on a lot of these companies, but look at the returns. They're just fabulous returns. So I'm going to change this to just 1%. Because we don't need to grow negative. Right, next up is Nomura. And here we need to freeze our competitors. So you see all the expansion that's going on, and yet the growth rate is 0. And these returns are just turning to crap. So what we're going to do is we're going to freeze everybody. Let's go over to the bank. I'm going to freeze everybody on this list and I'll be right back. All right, so everybody there is frozen. Next we have Mitsubishi Electric. He's got a bank loan we need to pay down. and 14 billion in 027, so it's not going to pay it all off, but less interest the better. Next up is Mitsui. SO, which is sell options. He's got options on Toshiba that he's shorted, and he's making money right now, but I don't think that this stands to go down any further, so I'm just going to cover these. Get the profit while I can. And the other thing that I need to do here is buy his competitors. There's a few that are well priced here. I'm just going to buy them up and get us over the 20% up, so that we have a 20% market share. That used up all of our cash. If we're going to buy more, we're going to have Tokyo buy it. PG&E here is decently priced, and so is Corley. But he's got a bunch of stock, so we don't want to buy him. Let's look at this one. PG&E. Bargain. So what we'll do is we'll have Tokyo buy him and donate him. We'll give 8 billion to PG&E and then liquidate him. Or, well, give him to Mitsui first and then liquidate him. That should give us more than 20%. Growing at 2%, and the growth rate here is only negative, is a -4. So as long as we're still very capable, and we've dropped. So we're going to increase our R&D to 8%. And if we drop any further, then we'll bump it up to 15. But otherwise, we're done there. All right, next up is Toyota Europe. Fiat is really well priced in that industry, and I want to buy him up. Grab his market share. We've only got 19 here. Fiat is 7 billion in size. Call it 8 billion plus 12 for 20 total. He doesn't have that, so we need Toyota, the parent, to do it. He's got it. So let's give Toyota Europe 18 billion. And we will buy and liquidate Fiat. Actually, rather than buy those other shares, I'm going to go ahead and merge him first, because our stock is trading well below our net value. And I can pick him up cheaper if I just merge him and then buy back through a green mail our stock shares. So let's do a merger with Fiat. So now 2% of our stock needs to be bought back. And we're trading at 10% below our value instead of the 5% that Fiat was. So what we're going to do is we're going to do a green mail. Here it is. Green mail, 2%. And we're going to offer them 20%. And they've accepted. All right, so let's pay off our loan. buy back our bonds. We buy them back at 103 instead of 104 plus 5%, so we'll buy them back at the 103. And we just picked up Alex. Oh, exactly. I thought it was going to be Alex Brown. What industry is this guy in? Shipping? I don't know if we have anything in shipping. Doesn't look like it. Alright. So Toyota Europe. Got a 10% cash reserve. We're all good. Let's just check our management settings. Reasonably confident, spending 18%. I'm going to drop that to 15. Our growth rate is 0, which is fine. I'm just going to drop the R&D down to 15%. More shipping companies we just picked up. Alright, so here we're done. A&P. A&P has some stock options that we want to cover. He's got stock options on Psi Systems, and as you can see, he shorted it and he's lost 3 times his money. So we need to buy those back. I'm supposed to be allowed to buy. Oh, these are put options. Okay, so I need to buy put options. There we go. Alright, so let's get rid of this. And this is an X. And who was the other one that we had buyback options? So it was Mitsui. Okay. So now we just need to buy 5 companies or groups of companies for these 5 industries. And then we can get on with our experiment. So let's go to Pharmaceuticals first. So we can buy, I think this is Weiland. So these bottom 3 we're going to buy. Start off with. So I'm going to buy these and I'm going to merge them all together, give them some cash, and then I will give them to Progressive. I will do that real quick and I will be right back. Alright, so this one down here is in Weiland. It's Wyeth Labs. And I couldn't buy him, 100% of him is owned. So only got 100 or 1.4%. So what we want to do is just max out our growth rate and go see if any assets are for sale. Which, judging by the credit ratings here, is probably not going to be the case, but if not, we'll just buy some new assets and just max out our growth rate. As far as the R&D goes, this beast up here is spending 25%. I'm not going to try to compete with him just yet. I'm just going to up this to about 12. Our current rating is, well, this is an earnings report. So our current rating is very capable. So I'm just going to make it 12 so that we don't fall below where we're at basically, and we're going to increase our growth rate to 40%. Now let's go see if there's any assets for sale. And we're looking for Pharmaceuticals, and he's not there. So let's see what we have cash-wise. That's Pfizer, which is not who I want to look at. Well, Mills is having a turnaround, which is nice. Okay, so we need to look at these options too. Let's take care of the options and the futures before we do anything else. So we have shorted Walmart, Costco, and Samsung. And we're making money on all of them. Walmart doesn't have much far to fall. So let's cover that one. And Samsung, I think, is in the same industry with Toshiba, which I think is about to have a turnaround. So let's cover that one too. Costco. We have shorted him and his income's going up. For some reason he's rated to sell. So he's losing money on interest rate swaps. And he's losing money on silver. Let's cover that one too. Look at our futures. We have shorted the index, and I said it was going to go down, and it's back up. Let's go ahead and take our profit. And put this money to work in this industry. So we have 3,500 in assets and 18 billion in cash. Let's put 14 billion of that into assets, and we will keep the rest as a reserve to grow with. VC is up, which is good. We've got a 20% cushion here. Our income's about to go way up. Gives us a 7% share. And the only bad thing is that the demand growth rate here is -3. Let's see if we need to freeze these guys. He's already frozen. He's not. So let's go ahead and freeze all these guys so they don't kill the returns here. So I'm going to go over to the bank and freeze everybody real quick, and I'll be right back. All right, so everybody's frozen, and we are good. The next one to look at is the steel industry. Right, so Rio here. These three. We can pick up this one if we want. So let's see who owns him. Nobody, so I will buy him. He needs 30 billion plus cushion. So let's give him 40. Let's also give Sanofi Aventis to Progressive. So Rio needs to pay down his loan and buy back his bonds. Yeah, I'm not sure. I think he's in mining, yeah. Mining. I don't think this was one I had planned on getting into, but we could. How much money is here? He's got 27 billion. And there's an 18% share, so there's what? 150 billion here. That's big. That's big enough. First, let's deal with steel. All right, so we've got 14 billion. Let's buy those other three small ones and merge them in. All right, they rejected a purchase offer at 20% above market price, but I'm going to try again at 25, and if they reject that, then I'll just merge and do a green mail. They were cashed out, so that's fine. All right, let's pay off our debt. All right, that's all the buying we're going to do. Now the industry is growing at -10. Our return is not that great. We're not spending very much on R&D. So we need to fix all this. So I'm going to kill our growth rate to 0. Increase our R&D to 16%. And then we need to look at whether or not we need to freeze these guys. Okay, so he's already frozen. Nice to see. All right, so they're not frozen. So let's go and first of all, let's make this 16-0, and let's knock the dividend all the way out. Let's knock it down to 0. All right, let's grab the summary and freeze everybody. All right, so we got Rio here. We have a 17% share. We are very incompetent. We're spending 16%. The industry is deteriorating, of course, and we've just frozen everybody. And we own his loan, so if there's anything left of him, we'll pick his market share up as well. Let's take a look and see how bad off he is. Okay, well, he's not terribly underwater. Might have something left. So we don't need all of this money. We can, since we're not growing at all, we can give back about 4 billion of this. Oh, let's give them to Progressive Insurance first. All right, so next up is air transportation. All right, so starting with this one here, which I think is Continental. And then these down here, maybe US Air as well. All right, well, let's start with this one. Alright, so he's going to need 30 billion. Let's give him an extra. Oh, look, he owns United Airlines. Let's give him an extra 20 billion too, because certainly United Airlines owes money. Just going to make it 45 billion total. We may end up giving him more, actually. Alright, so let's buy back these bonds. Alright, now let's take a look at United. He's trading above his price, so I think we want to buy him. How much of this one's owned? Too much. So let's buy these assets away. He's got 8 billion in debt. Let's buy 12 billion of his assets and then sell him. Qantas has some for sale, so we'll buy those first. I don't really care that we're taking a loss on it right now. Just want to get out of it. Pay extra for Lufthansa, or get these for bargains, or we could possibly do both. Alright, now the only question is whether we want to buy Lufthansa. This was dropped all the way back down to 86. Let's look again. the one we just sold? US Air here was trading at 120% a minute ago, and now he's fallen below his net worth in terms of stock price. So let's go ahead and pick up him as well. And based on what he's trading for, we should have enough money. Japan Airlines is offering to acquire all of the stock of United Continental Air. Didn't we? We already sold our shares of United Continental, unless US Air owned the other part of it. Oh, I'm just getting confused because CAL is United Continental Air and UAL is United Airlines. Okay. That's fine. It's whatever. Let's liquidate US Air here. That can be confusing sometimes. Alright, so let's buy back our bonds and then we'll deal with this stuff and then pay off our loan. Alright, so our futures, we have oil that we have bought, and we're losing money on it. And it's down from the beginning of this episode, so I'm just going to cover all this. Alright, and we have shorted Texaco and we're losing money. Alright, so let's give him 14 billion, 15 billion. Alright, we've got a 25% market share. The industry's growing at a -10. We are somewhat mediocre. So let's set our R&D to 18%. Our growth rate to, let's see, I guess just 0. Kill the dividend and we'll freeze everybody. Let's take care of this first. So dividend 0. And let's see if any of these guys are frozen already. They don't have a lot of credit, but these growth rates are just crazy. He's frozen. He's got credit left. So let's go ahead and freeze everybody in here. Alright, so I'll freeze them all and I'll be right back. Okay, I know this is taking a little longer than I thought it would, but, you know, we're not that far away from being done. so here, got several candidates. I'm gonna just buy those up. Alright, I think we forgot, or at least I forgot. I need to deal with... Oh, no, okay, so we dealt with them. Alright, good. Alright, so Imperial Chemicals here. He has shorted Walmart, and Walmart's on the way back up, so we need to cover that. And Samsung, same deal, need to cover it. Alright, so we shorted the index, still expecting it to go down, but I don't want to have this company engaging in that, so I'm just going to cover it. Alright, so let's have Imperial Chemicals here buy these two, and we'll see how much of that one's owned. Let's give him 13 billion. Alright, so we've got a 9% share. Growth is negative, and as you can see, these guys are just spending money hand over fist to grow, grow, grow. So what we're going to do is we're going to increase our R&D to 11%. We're going to make our growth 0, our dividend 0, and we'll freeze everybody. Okay, I don't have as big a market share as I'd like here, but what we have looks fine. We've got everybody frozen. We have 8.5% market share. We've increased our R&D. And until the economy turns around, basically we're just going to help keep the returns in the positive category, in the double digits, hopefully, by freezing everybody and by not growing ourselves. When the industry turns around, we'll grow and hopefully make a huge profit. All right, so let's just give him to Progressive. And that just leaves Brewing and Distilling. All right, so Asahi here. Maybe Dio, and then these little ones. Let's look at Dio. He owns 2 of the subsidiaries. His bonds are trading really low. So we can make make back some of what we're going to spend on the excess here by buying the bonds back, so let's do that. We're going to start with buying Dio. Alright, let's give Dio 45 billion. And buy back his bonds. Now let's take a look at these companies he owns. Guinness is trading at below his value, so we'll just liquidate him. And this one's trading at above his value. So let's buy 10 billion in assets away from him and then sell him. Alright, let's change banks first. Alright, so we're already in second slot here. Let's buy Asahi and we'll get all the way up to the top. Let's pay off our loan and then deal with all this other options and everything. Alright, so we shorted the index. Let's get rid of that. We shorted Samsung and mobile. Wow. Just need to go over and look at mobile with the price on oil falling. PBR maybe needs to do some stuff about that, so let's buy these back. I don't think we want to keep this bank stock. Especially with the interest rate as high as it is. Alright, so we have 27 billion to invest. So let's start by buying this one. Alright, so we'll buy this one too, and that'll be the last one. Alright, they think it's inadequate, so let's just merge with it. Everybody should have been, well, he had 1%, so let's do a green mail and buy that back. Won't consider 1%, or 20%, I mean. Alright, let's try 26. Alright, Tochu is still making money, which is good. Alright, let's see what we need to do here. Growth is negative. And returns are okay. We're reasonably competent. Industry is deteriorating, so let's make our growth rate 0, our R&D 16%. We'll knock our dividend down to $1, and then let's see about freezing anybody in here. Okay, so let's freeze everybody in here. All right, we got everybody frozen, and we have a 28% market share. We are reforming everybody. We are reasonably competent, so I mean, all of that looks good. The thing is, I think we might have too much money. That's the wrong one. The one that we own. So let's pay off our loan. So we have $8 billion. That's okay. So we don't have too much money because we're going to be paying all that tax here shortly. And our income is projected to go up. All right. So let's give him to Progressive. And I think it's time for Progressive to be merged with RakeM Insurance. He now has 12 stocks, I believe. It's 9, 10, 11, 12. So let's give him to, or have him merge with RakeM Insurance. Now we have our one shorted stock and 3 stocks that we're going to use for our options test. So before we start our options test, let's take a look at Intel here. So he's down from $11 a share down to $7.25, and he's not bankrupt or anything. He's rated to hold. Stock is still on the way down though. I shorted him at 22. Look at this tax basis. I've got this was the current value at the start. He's dropped another 8 billion, 8.5 billion. So we're making 22.5 billion now. And I don't see him going down a whole lot further. He could go down to his net worth, but maybe $4 a share or something. Income's really low. But I might have to wait a while for that to get down to 360. So I think I'm just going to cover it. The dividend's really high on that, so I'll just as soon cover it. Alright, so I think we're ready to begin our test. And we just have to decide who's going to be on the bottom rung and who's going to be on the top rung and who's going to be in the middle. So I just checked the runtime and I cannot believe I've recorded 83 minutes of play already. Now, if I fast forward a lot, I can probably get that down to an hour, but still, I can't believe I've been playing that long. So anyway, with the fact that we're running out of time at this point, I really hate having to put off this experiment any further because I know you guys want to see what happens with it. But at the same time, I don't want this to go too long. So I think what we'll do with the few minutes that we have left is we need to go and check on the options at PBR and make sure that there's not any problem with those. And then the very first thing, I promise, the very first thing we'll do in episode 20 is we will start that experiment. Alright, so let's go over to PBR and check on these options. Looks like he's starting to backpedal. He's losing a lot of money here. And it's primarily due to the lower price on oil. Let's take a look at the industry. We're still growing at a -10, which is fine, because the growth rate down here is a -6. And I believe we have everybody frozen. He's not frozen. Let's see if mobile is frozen. Mobile at one time had a CCC credit rating. And I don't know if he's frozen because he owes more than he has in equity, or if he's just frozen because we froze him. So let's look at total. He's got credit. Money on futures. Making money on some options and losing money on Texaco. So we can't really grow any more negative. I guess we just need the price of oil to go up, which looks like it's headed up. I haven't really been paying attention to silver and gold. I know it got up. I didn't know it got up that high. Same thing with silver. Got up kind of high. Just not sure what I want to do with these. If I want to hang on to them or what. They don't expire until 2022. Year and 4 months out. I guess we'll hang on to them. could freeze everybody to kind of slow down this growth. Just freeze Exxon. Well, his earnings are supposed to go up, so our rating now. Can we lower it? Nope. Keep that R&D up there. Okay, well, I guess we're just going to ride this out. I mean, these returns are fabulous. I mean, they're just absolutely fabulous. With us growing negative, and as long as Exxon slows down, I don't think he has that much credit left. Yeah, he's only got a little bit left, so he can't really grow at 40%. And he would just take some of this money when he declares in January to pay this debt down. Sure, his stock price should go up. So I guess that's it for today. I'm sorry we didn't get to the experiment. We will do that first thing in episode 20. I was surprised to see that the index really didn't drop that much. Of course, we only played a little over a month of game time, and our net worth is pretty much stable. So we'll see what happens when we come back and get some more game time under our belts. Alright, but anyway, that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.